Hello everyone, good morning. This is Sage live from 𝐊𝐴𝐚 TV studios and you are watching the early trades. Australian shares slipped from the 14-month highs on Tuesday, tracking losses on Wall Street. Technology and financial stocks weighed the most on the local benchmark. The S&P/ASX 200 index fell 0.5% to 7,030.10 during early trade hours. ASX 200 is edging lower after rising for 5 straight sessions to hit its highest level since the 24th of February 2020 on Monday. Overnight, all 3 major US indexes settled lower, slipping from last week's record levels. Investors awaited direction from corporate earnings, while the electric car maker Tesla fell more than 3%. In other markets, Japan's Nikkei traded 1.73% lower on Tuesday, while S&P 500 E-minis futures were up 0.17%. Afterpay was among the top percentage gainers on the benchmark, trading 2.6% higher after it said it was exploring a US listing and reported a more than twofold jump in its third quarter sales volumes. Gains in Afterpay, however, failed to push the Australian Technology Index higher. The index declined as much as 1.2%. And miners declined about 0.5%, with BHP Group and Fortescue Metals Group falling about 0.2% each. Rio Tinto, the world's biggest iron ore miner, added 0.8% after it reported a 7% rise in its March quarter iron ore shipments compared with a year earlier. Lynas Rare Earths lost as much as 4%, marking its biggest intraday percentage drop in nearly 4 weeks after it reported a slight drop in its quarterly rare earths output. Financial stocks also edged lower. The top lenders, Commonwealth Bank of Australia and Australia-New Zealand Banking Group Limited, declined 0.4% each. All the major US stock market benchmarks closed lower on Monday. The S&P 500 and the Dow Jones Industrial Average slipped from their all-time highs set on last Friday as investors started booking profits and looked for earnings to justify the high valuations in equities. Technology and consumer cyclical stocks declined the most on S&P 500, while stocks in the energy and basic materials sectors pulled down the Dow Jones. The S&P 500 slipped 0.53% to 4,163.26, and the Dow Jones was down 0.36% to 34,077.63. The Nasdaq Composite Index dropped 0.98% to 13,914.77. The small cap Russell 2000 declined 1.36% to 2,232.00. The US dollar index touched a more than 6-week low. MSCI's gauge of stocks across the globe shed 0.28%, its largest daily drop since March the 24th. The Pan-European Stocks 600 index lost as well 0.07%, and emerging market stocks lost 0.01%. MSCI's broadest index of Asia-Pacific shares outside Japan closed 0.12% higher, and Nikkei futures lost 1.48%. Treasury yields edged up after posting on Friday their largest weekly drop since June. Oil prices slipped on concerns over rising coronavirus cases globally. Looking at the major newsmakers on the ASX, Keystone Dairy Corporation Limited reported financial year total group sales revenue of $50.7 million versus $22.5 million PCP. Rio Tinto released the first quarter production results, achieving an overall solid operating performance in the first quarter. Rio has maintained guidance ranges in all the products. Pilbara iron ore shipments of 77.8 million tonnes was 7% higher than the first quarter of 2020. Production of 76.4 million tonnes was 2% lower, driven by above average wet weather in the mines through February and fixed plant reliability. Sydney airport traffic performance for March 2021 reflected weak travel sector. The total passenger traffic in March 2021 was 1,153,000 passengers, down 42.6% on the prior corresponding period, or PCP, and 68.4% on the corresponding period in 2019. Domestic passengers totalled 1,120,000 for March 2021, down 15.1% on PCP and 52% on the corresponding period in 2019. Australian miner Lynas Rare Earths posted a 20.6% rise in quarterly revenue, helped by a rise in demand and prices for neodymium and praseodymium. The miner posted revenue of Australian $110 million for the first 3 months to March end, up from $91.2 million a year earlier. Seven West Media announced an Australian first partnership with KERV Interactive to deliver the revolutionary shoppable ad experience 7 Act. The new product allows advertisers to dynamically insert QR codes seamlessly into video assets, enabling brands and content creators to showcase specific products, offer relevant information and provide contextual shopping opportunities. And meanwhile, the Seven Group has successfully completed the institutional component of its $550 million capital raising, saying it was significantly oversubscribed with strong support from across the market. Splittert appointed Paul Rosengard, Christopher Curtin and Michael Elias as senior executive advisors. Afterpay is exploring a US listing without disclosing a timeline. Afterpay's third quarter sales volumes more than doubled and beat market expectations. Afterpay reported 5.2 billion Australian dollars underlying sales in the 3 months ended March, 104% higher than a year earlier. Then, Woolworths Group is strengthening its partnership with Quantium, a world-class data science and advanced analytics business, and increasing its shareholding from 47% to 75% for a purchase price of $223 million. Hub24 has reported a record increase in quarterly net inflows for the March quarter, citing favourable market conditions. The company reported net inflows of $1.9 billion for the quarter, an increase of 41% on the prior corresponding period. Temple & Webster's third quarter revenue rose 112% compared to a year ago. Active customers reached about 750,000 by the end of the quarter, with April revenue up by more than 20% compared to last year. Stockland's elevated residential business inquiries have translated into a strong net sales result of 1,891 lots, up 69% on the third quarter of 2020. The house builder is forecasting residential settlements for the full year at around 6,300 lots. Breast screening business Volpara Technologies reported 20% growth in its annual recurring revenue to $18.6 million at the quarter's end. And meanwhile, the London markets traded in a red zone after strengthening of sterling against the US dollar and identification of a new virus variant by Public Health England. Besides, the Canadian Finance Minister, Chrystia Freeland, on Monday lined up billions in new spending to provide emergency support to an economy battling a virulent third wave of COVID-19. The 2021 Canada budget projects the deficit to hit $154.7 billion Canadian dollars in the current fiscal year. Canada's 30-year yield touched a one-month high at 2.071%. Canada said on Monday it plans to cut carbon emissions more aggressively and issue its first green bonds, part of a global push for more action on climate change. Stay tuned with Kalkine TV for more Market Live updates. We'll be back with more updates on markets, economy and diverse themes and sectors.